I now hand the conference over to Mr. Nagesh Basavanhalli, Group CEO of Greaves Cotton Limited. Thank you, and over to you, sir.
Thank you. Good morning, everybody. Thank you for joining us today. Hope everybody is doing fine, staying safe and healthy amongst this challenging times. Greaves has transformed multiple times during its 160 years journey. We are at the cusp of a lot of disruption, and as part of that, the pace of technology change intensifies. Post-COVID, there has been a lot of challenges and opportunities. We continue to strive to create a comprehensive ecosystem which will be focused on several different areas: clean mobility, retail expansion, finance availability for enabling our businesses, and developing our core businesses of engines, aftermarket, gensets, and farm. With that, we aim to drive agility and drive the transformation, which is so very essential in these disruptive times. The company has made significant investments over the last 3 to 4 years in terms of building a clean tech portfolio, starting with BS6 engines, which is now out on the road, and Mr. Ajit Venkatraman will talk more about it. The Crest technology, which is undergoing various stages of testing. The e-mobility division, which has spawned off into both the two-wheeler and the three-wheeler division, as well as the B2C place, which is into the Greaves retail and now into the Greaves finance. As we look forward, the focus areas of the company are sharp. Regarding the core engines, extending the engine capability towards a global engine play, both auto segment, non-auto segment, strengthening and growing the aftermarket, as well as a non-auto product portfolio, given some of the opportunities post-COVID. Also looking at industrial engines, both small and large. Regarding the newer mobility businesses, in terms of e-mobility, multi-brand service, which is our Greaves Care, multi-brand retail, our Greaves retail. Our mantra of getting closer to the customer, organizing the unorganized, extracting more value through the value chain continues. So the expansion across the length and breadth of the country in these areas will continue, whether it is the two-wheeler e-mobility store, the multi-brand service stores, the multi-brand retail stores. And over the journey of the next couple of quarters, you'll hear more about this. The team, as you're aware, has worked very hard. The last couple of quarters has been tough. And I'm confident that based on the prior experience where we had 9 to 10 quarters of continuous growth, that this team has the depth and will continue this transformation. So I'm very proud that we have organized the teams. Mr. Ajit Venkatraman, who was announced the executive director back in August, continues to lead the Greaves Cotton core businesses, which is the engines, the aftermarket, gensets, farm, etc., and grow those businesses. Sunil Shahi, who was heading our non-auto business, moves on to take a bigger role in the new mobility area, especially in the three-wheeler business areas. Mr. Mohanan, who was a KMP, steps down from the board to focus more on his core area of manufacturing, supply chain, and operations as we continue to grow. There was another KMP change. Our CFO, Mr. Amit Mittal, who had come from private equity background, decided to go back to private equity. Hence, he has decided to leave for personal reasons. That CFO position will obviously be filled shortly, and we will announce it when we are ready. I would take this opportunity to thank all the customers, our OE partners, our suppliers, our employees during these tough last 8-9 months post-COVID, who have stood together, and we're trying to come back stronger as the market recovers. Greaves is going to continue to do both the offense and the defense so that post-COVID we come out stronger. With that overview, let me hand it over to Mr. Ajit Venkatraman, who will talk to us about our Greaves core business, followed by Arun Srivastava, who is going to talk to us about the new mobility businesses. Ajit, over to you.
Thank you, Nagesh, and good morning to everyone in the call. And thank you, Nagesh, for giving an overview of the strategic direction we are heading. We are not immune to the COVID-led market slowdown. We have consciously invested in building capabilities, strengthening partnerships and collaboration. We are also removing redundancies, sharpened our focus on cash conservation, all to make the core stronger, leaner, and more flexible. This will help us to focus on newer strategic projects. Our focus is to improve and grow. We will be scaling up these projects to build a stronger business portfolio with higher focus on value creation and profitability. With all structural changes, we have gained efficiencies at multiple levels. The recovery in Q2 has been positive but slow. The Q2 revenues, as you must have seen, has shown a growth of 96% over Q1 of this financial year. This quarter also saw closure of the facility, and we are working to further realign locations, ensuring productivity levels are in sync with demand. With revival seen across core sectors of the economy, we remain optimistic about the positive growth across various businesses we are in the balanced part of the year, and aim to drive the profitable growth. While COVID has created a short-term dent, we believe that the company will come back much stronger. Market is slowly recovering, with OEM confidence signaling positive growth in the rest of the year. We have leveraged this period to engage better with customers, channel partners, suppliers, employees. Can I request mute?
Bye-bye. Machar.
Can I
Request go on mute, please. Someone who is joined.
Today we are stronger. Sorry about that. Today we are stronger and financially stable, owing to the realignment of various structural costs and tighter focus with several initiatives like closure of the Ranipet factory, optimizing people and productivity levels to meet our new demands. We are also happy to mention that we have locked in a leading Indian OEM for our Indian business as well this quarter. On the financial side, we reported a revenue of 288 crores in Q2FY21 as against 490 crores in Q2FY20, a degrowth of about 41%. The revenue for H1FY21 was about 435 crores against 967 crores for the corresponding period last year. Just to give you a quick update on the various businesses, the auto market is dependent upon the three-wheeler industry, and as I had mentioned, we are seeing strong comeback in the cargo segment, especially where it has reached the pre-COVID levels. The passenger segment continues to have a slow recovery due to social distancing norms. We are seeing a good comeback in October, but whether this momentum continues depends upon post-Diwali sales. In the non-auto segment, infrastructure is picking up. Our non-auto engines have seen a robust growth of almost 2x compared to pre-COVID levels. Our aftermarket has reached pre-COVID levels. In terms of new business wins, one of which we have already mentioned, that we have a new partnership with a three-wheeler OEM for diesel. So we are also at advanced stages of the conversations with global OEM for small four-wheelers. The Crest CNG engines, we are also in advanced stages of discussion with a three-wheeler OEM. Last quarter, we also launched a couple of new products in the non-auto segment, Duramax pump sets, and we also have won several defense wins, deepening the play in the non-auto segment. With the economy opening up of offices, metros, schools, colleges, we anticipate a stronger recovery in the second half. A renewed investment in genset business is going to be there in Q3 and Q4. With that, I would end. Thank you very much, and I will hand it over to Arun.
Thank you, Ajit. Good morning, everyone, and I hope that all of you are doing well. Ajit covered the Greaves part. I will be covering our new mobility businesses. An important part of our B2C and clean tech play is our e-mobility play under Ampere, which has two businesses, which is the electric two-wheeler under the Ampere brand and the electric three-wheeler under the LE brand that we just acquired through Bestway in the last quarter. When we started working with Ampere early 2018, the business was at a monthly run rate of around 2 crores, and this has steadily improved over the past couple of years and has now reached close to a 19 crore monthly run rate in September 19. This represents almost a 10x growth over the past couple of years, while this is at a slightly lower base, but we expect the growth momentum of this business to continue further. Ampere business has further consolidated its positioning and increased its market share to 20% of the overall market in last quarter. The business opened almost 60 new dealerships since the unlock began and now has 265 dealerships across the country. Ampere has also built a very strong portfolio of B2B customers with Ampere vehicles powering people mobility as well as e-commerce delivery for customers like Bounce, eBike Go, Amazon, Big Basket, Domino's, Reliance Retails, amongst a lot of other customers. We have seen a very strong response and support from some of our B2B customers, including large repeat orders. We expect that this part of the business will also continue to grow and deliver a lot of momentum over the next couple of years as we go ahead. To enable different customer needs, Ampere has also built a very strong financing, leasing, and exchange programs which can serve the needs of various customer segments. On the product portfolio side, Ampere has expanded the product portfolio from slow-speed lead-acid products towards a much healthier mix of lithium-ion and high-speed products. Now, if I look at it, our lithium-ion product portfolio is more than 60% of the portfolio. And if you recall, lead acid used to be almost 100% of the portfolio when we acquired. So the portfolio is very steadily shifting towards better technology, lithium-ion products. Also, the lead acid, also the higher speed portfolio, which we entered the market sometime last year, has been growing fairly steadily, and almost 30 to 35% of our sales are now coming from higher speed wheelers. Our recent product, high-speed scooter, the Magnus Pro, has seen a very, very strong response from our customers, and we believe that now we are in the sweet spot of the mass market mobility in the 35,000 to 80,000 price range, and this we believe is a positioning which we have taken to help the overall two-wheeler industry transition strongly towards electric as we go ahead in this decade. On the operational front, Ampere started building a team to deliver operational excellence, and this has also started giving results now. Ampere has progressed significantly on product technology and substantially increased the localization content in its products. The front-end and back-end controls, along with improving sales, has helped the business deliver a positive EBITDA for the month of September 20. So this being a milestone for Ampere in terms of delivering a EBITDA positive performance. and there are a lot of factors which have gone into it. Also notable for Ampere is that on the back of strong operational controls, the working capital, which used to be close to 108 days a year back in September 19, has been brought down to 53 days. With improved profitability, the cash position has also improved, and Ampere has now steadily started delivering positive cash flows for the second quarter now. On the e-3-wheeler front, we acquired Bestway in the month of July, and Bestway is a very strong player in some of the eastern pockets of the country and eastern UP. We are expanding the channel for Bestway into other bigger markets of northern part of the country, as well as some of the emerging markets in the southern and western parts of the country. So this business is also experiencing a good traction. Post acquisition, we had 2 months of full play in the month of August, September. And we've seen that the business has delivered almost 600 to 700 e-rickshaw sales per month. So this again makes Ampere integrated last mile mobility player with both two-wheeler as well as three-wheeler play, and will constitute a very important part of our overall portfolio. As we look ahead into the world post-COVID, as the unlock process further intensifies, and it's almost as the economy completely opens up over the next couple of months, safe, clean, and affordable transport will be an important lever for the country going ahead, and all our Ampere businesses, be it the two-wheeler or three-wheeler, is uniquely poised in driving this momentum. So we are fairly confident that Ampere businesses will continue its strong growth thrust and become a very strong arm as we move ahead. Thank you. And Ashok, I think we can open up for questions now.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. An operator will take your name and announce your turn in the question queue. Participants are requested to only use handsets while asking a question. In the interest of time and fairness to all participants, each participant will be allowed one question and a supplementary question if needed. If participants still have more questions, they can join the queue afresh. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Manish Goyal from Enam Holdings. Please go ahead.
Yeah, thank you so much, and very good morning. I have a couple of questions. First, on the opening remarks, it was mentioned that we have logged in a leading OEM. So if you can provide more insight as to what fuel base it is, and if you can share more details as well as on the global OEM for the four-wheeler which was mentioned, and in that related question on the progress for the CNG engine tie-ups. Thank you.
So Ajit, you want to take that on? I think it's all on the engine side.
Sure. Thank you. Thank you, Manish, for the question. As I mentioned, we have tied up with a leading Indian OEM for three-wheelers. This is for the diesel engine, and this we will be announcing in detail at an appropriate time fairly soon. At this point of time, I'm not able to reveal the name, but it is something which we have locked in, and we need concurrence from the other party as well. Second one was with respect to the global OEM. It is a similar state, but we are in the final stages of discussion. And again, at an appropriate time, very soon, we will make an announcement as well on that. The third aspect of
Sorry to interrupt, but this four-wheeler engine is again for a diesel portfolio, or if you can.
It is currently for the diesel portfolio.
Okay. Sorry. Yeah, please.
And for the Crest CNG engine, again we are in advanced stages of discussion. Again with a three-wheeler OEM, and we will be coming up with the details at an appropriate time.
But sorry to harp on this, but we have been kind of hearing about the tariff for at least for the CNG for quite a long time, and nothing material has been happening. So, any timelines would you like to spell out, please?
So at this point this is a new technology, and therefore it takes a little bit of a time for signing of the contracts, and I appreciate your patience. But at this point of time, it is difficult to exactly say what time frame it will be done. But we will be making that announcement fairly soon.
Yeah, and if I can just jump in, Ajit. Thank you, Ajit. I think you've covered it well. For the gentleman who was asking the question on the CNG, I think on the diesel side, Ajit has more than amplified. On the Crest, since there is a historical element to it, this is a transformational technology, first time in this part of the world. Clearly the alpha and the beta stages of the pilot have gone very well. There are not one but two OEMs who are working with us very closely, like Mr. Venkatraman was talking about, right? And at the end of the day, the BS6 launch and then the COVID obviously caused a couple of quarters of delay. And at the end of the day, as you're all aware, we are in the business of providing engines, and at the end of the day, we need to work with our OEM. So we are working very closely. I think the team, in terms of the delivery, the solution, the value proposition, absolutely on track. In terms of the final sign-off, like Ajit said, I think we will announce it hopefully sooner than later, but once we get a final confirmation. To date, we don't have the final confirmation, although actual results are meeting or exceeding the goals of the fuel economy that was initially set. Yeah? So we will keep you updated. We are also as eager to kind of move with this transformational technology and bring it to India. Obviously, as a company, from a capex standpoint, we have made a decision that we will want to get a couple of customer sign-ins before we invest any money, any additional capex. So hence, you can appreciate that we are being very prudent. We will work with our customers and announce at the right time. Yeah?
Sure. Okay, thank you. And last question on electric vehicles, just want to know how are we positioned on, say, strategy to replace the imports from China, especially batteries and other things. So if you can just highlight the company's strategy on this.
Sure. So Arun here, I'll take this question. It's a very important question because it is one of the pillars of our strategy, that how do we reduce dependence on a single country and build a much superior supply chain. So in fact, we started on this journey almost a couple of years back, and if you recall, our product high-speed scooter Zeal was amongst the first scooters in the country to get the FAME 2 approval, complying with some of the phased manufacturing plan guidelines which were imposed last year. We have continued that journey, and it's in a fairly advanced stage right now. So for our high-speed scooters, the localization levels are fairly high. A lot of critical components are coming from our partner ecosystem in India. And also, this journey is not a simple and easy journey because, as you all would know, that the component ecosystem in the country is, for the electric vehicle side, is still fairly nascent. So we have worked with a lot of OEMs to co-develop components which would be suitable for the Indian market and in the Indian driving conditions. So as we look at in the next 3 to 6 months, we will largely complete our localization journey on the high-speed side. We have proactively taken up the localization for slow-speed scooters. Now there's no regulatory requirement for slow-speed scooters, but as part of our supply chain strategy, that has also been initiated. Slow speed may take slightly longer, but overall, in the next 18 months or so, we expect to complete the journey for the slower speed as well. So that's in a nutshell. In the next 6 months, largely for high speed and slightly longer for the slower speed.
Sure. I have 2 questions. I will come back into it. Thank you.
Yeah.
Thank you. The next question is from the line of Anish Jobalia from Banyan Capital Advisors. Please go ahead.
Yeah, hi. Good morning. Thanks for the opportunity. My question is, what is going to be our strategy going forward, given the outlook on the passenger three-wheeler is slightly negative? So how do we plan to reach the pre-COVID levels at the revenue and margin levels?
So Ashok, the call was a little muted. Can somebody repeat the question, please? We couldn't hear the question properly.
Mr.
Get closer to the phone.
May I request you to speak a little louder?
Yeah, my question is, what is going to be our strategy going forward, given the outlook around the passenger three-wheelers is slightly negative? So what is going to be our strategy around this, so that we reach our pre-COVID levels sooner than later?
No, I think fair question. So Ajit Venkatraman addressed this earlier. Ajit, you want to talk about the cargo and the passenger, and by what quarter you see the market coming back post pre-COVID levels?
Thank you for your question, Anish. As you must have seen that the three-wheeler market especially...
Sorry to interrupt you, sir, but your voice is not clear. Can you speak louder, sir?
Is it better?
No, sir.
Not clear again?
No, can you increase the volume of your handset?
It's at maximum here.
Yeah, Ajit, it is better now.
Yeah. Okay. Anish, thanks for your question. The three-wheeler market especially it constitutes of both the cargo segment and the passenger segment I had mentioned before. It's approximately 65%, and about 35%. The cargo segment has almost recovered to the pre-COVID level, and the passenger is not. It is going to take some time, given the social distancing norms and the vaccines are a bit far away from now. So the good news is that our dependence is not just on the automotive segment. As you would have noticed, we have the aftermarket business and the non-automotive business. The aftermarket business has bounced back to pre-COVID levels, and we expect a strong growth going forward in the remaining part of the year and going forward as well. The bright side is in the non-automotive segment, and especially in the size of engines we deal with, high volumes engines we deal with. It is the non-automotive segment which constitutes the majority of the business, both domestically and internationally. And that is going to be our renewed focus. The second aspect of it is that we are not just going to focus on the product which is the engine. You might have noticed that we have also started getting very seriously into the equipment business as well, whether it is in the light construction business or in the farm equipment business. Those are strong growth areas. We call it the non-automotive small engine segment. And this has shown some phenomenal growth, and we expect that segment to grow as well. The other area which we are looking at is to try and find out new applications for our core small engine segment. And this we see has got a large opportunity in the overseas market, and which is where we will be focusing going forward.
Sir, so when do you expect to reach pre-COVID levels, given the uncertainty around the auto engine? So that's my follow-up, and that's my last question.
See, Anish, I have to give you this answer with a little bit of a disclaimer. Based on the performance so far in this quarter, the expectation is that Q4 is going to be, we are going to have a strong exit in Q4, but a lot is dependent upon how the market sustains after the Diwali festival. And this is something which is quite unpredictable, and therefore I have to say this with the abundant caution.
Okay, thank you so much, sir.
Thank you. The next question is the follow-up question, which is from the line of Manish Goel from Enam Holdings. Please go ahead.
Yeah, thank you. Sir, what kind of benefits on cost savings we see due to closure of the Ranipet plant? If you can kind of provide more insights on that.
Ajit?
Thank you for your question, Manish. We have stopped operations in the Ranipet facility, and we will be consolidating most of the operations which were happening in Ranipet into our Aurangabad facility.
Sorry to interrupt you, Mr. Ajit, but your voice is not clear, sir. May I request you to increase your volume?
Is this better? Is this better?
Yes.
Yeah. Manish, you are able to hear me?
Yeah.
So we have been consolidating our operations to make sure that structurally our costs are reduced, and we have synergies going forward in terms of more efficient operations. For the volumes we are doing right now, we will be consolidating our small engine operations into the Aurangabad facility. So this should bring about a significant reduction in the overall fixed overhead costs and in terms of manpower costs, and which we should be seeing from the next financial year onward. Because as you can see, we have taken a impairment, 31 crores of exceptional
Right.
item which is there in our P&L this time. So you can expect that the benefits from this will be starting to flow from next year on.
But can you quantify in absolute terms what would be the saving on fixed cost?
At this point of time, I would refrain from doing that. We are still in the process of evaluating the complete impact. But I can tell you that it will have a significant impact.
Ajit, if I can just jump in, directionally it would be, I know where you're getting at, and let the team work on the numbers, but directionally it would be higher than 10% of the overall fixed cost. I know where you're getting at.
Okay.
That's the goal, that's the intent.
Sure. And on the farm business, we did see some recovery on quarter basis, but somehow, despite rural economy doing well and looking at other companies' numbers as well, we have had a kind of I would say not so strong recovery. So if you can kind of highlight on what's like strategy over there, and if you can also share the volume breakup for the light agri and power tillers volumes as well, please. Thank you.
Thank you for your question, Manish. As I had mentioned, there are several new products which we have launched recently. And then the other aspect of our strategy going forward is not just to sell engines, but to sell equipment as well. I do understand your question as to you must have seen the tractor segment showing phenomenal growth in the last few quarters. One, we have to mention that most have been impacted by the dealerships being not operating at optimal level almost for the first 2 quarters. We are seeing some of those dealerships and distributors opening up in the last month or so. So going forward, you should see see the performance improving as we go forward.
Okay. Would it be possible to share the breakup of the numbers, power tillers and pump sets and the light agri equipment?
If you can just hold on for a minute. We have shared it as a part of the presentation.
But no, we don't have the breakup of agri equipment.
Yeah, Ajit, if I can just come in. So, if you look at the volumes one, in volumes, today what you are seeing in the light equipment category is primarily the agri machinery. But as part of future, as Ajit was mentioning, with our increased thrust on the non-auto small products, we are also looking at adding some more product categories into this, and that is where the grouping has changed to light equipment. But today, that is primarily the various agri equipment related volumes. So we are now looking at it as more as an aggregated level.
Okay, fine. And last question on the electric vehicle. I believe government is contemplating to launch PLI schemes over here as well. So are we also kind of considering to be kind of bid for it or take the opportunity?
Sorry, I missed. Which scheme were you talking about?
Production linked incentive schemes. So
okay.
there was some news article where even
yes. So that was a lot on the lithium-ion battery. There have been incentives announced for the cell manufacturing in India. So as part of our strategy, currently we are not looking at lithium-ion cell manufacturing ourselves. It's a very different ballgame, and we remain agnostic to or wedded to a particular technology. We will be looking at the best technology solution in terms of the battery chemistry. So we will be sourcing from these different partners. Having said that, on the manufacturing side, for the vehicles, for certain critical components, including some of the lithium-ion battery packs, etc., those are the areas which we are looking ahead in future as the volumes built up and the viability starts coming in. That is something which we'll be actively looking at, but not on the lithium-ion cell manufacturing.
Sure. Thank you so much.
Yeah.
Thank you. That was the last question. I now hand the conference over to Mr. Ajit Venkataraman for closing comments.
Nagesh, do you want to take that?
Yeah, okay. Thanks, Ajit. Thank you all for your time and attention today, especially in these tough times. In summary, what I can say is we are dealing with the pandemic. We are coming out with both offense and defense mechanisms, both in terms of newer areas of market, newer businesses, as well as structural efficiencies that some of you asked about. Stay tuned. We'll continue to keep you updated as we go on our journey. Our lines and communication remain open. Our communication team will be available in case you have follow-up questions or need any specific answers. Feel free to reach out to us. Thank you all. Have a great day and a great week ahead. Thank you. And also please do have a good Diwali weekend and a Diwali festival coming up ahead. Thank you.
Thank you. On behalf of Greaves Cotton Limited, we thank you once again. Stay safe. With this, we conclude this investor call. Thank you for joining us.